Hey friends, welcome back to my channel. I'm Joe, and today I'm going over two reputable brokerages in the financial industry, namely Vanguard and Fidelity. Vanguard and Fidelity are two major brokerage firms, and they offer a broad range of investment products from brokerage accounts to retirement accounts to other financial services. They have been in the financial industry for so many decades that you can't go wrong with choosing either of them. But there are some differences between Vanguard and Fidelity that are worth the discussion regarding fees, features, and user experience, and that is the reason why I'm creating this video. As a side note, Vanguard and Fidelity did not sponsor this video. This is my own research and my own review on these platforms. If you appreciate the time that I put in to create this content, please smash that like button for the algorithm. By the end of this video, you will learn the differences between Vanguard and Fidelity and decide which brokerage you should go with. And now, let's get started. First, let's look at the fees of Vanguard and Fidelity. For Vanguard, there is no minimum to open a brokerage account. However, it charges $20 in annual account service fee, which you can waive by signing up for electronic delivery of documents. For Fidelity, there is also no minimum to open a brokerage account. But what's good about Fidelity is that it doesn't charge any annual account service fee. So overall, Fidelity has a slight advantage over Vanguard in terms of account fees. When it comes to trading US stocks, ETFs, and most mutual funds, both brokerages offer zero commission fees, which is quite convenient for all investors. So in terms of commission fees, there is a tie between Vanguard and Fidelity. Now let's dive into the fun part about stock investing with these platforms. If you are thinking about investing in stocks with Vanguard, it requires you to buy the whole share of a stock. For example, if you want to invest in Tesla stock with Vanguard platform, then you will have to buy a whole share of Tesla stock. And currently, Tesla is trading at $908 at the time of making this video. That's a bummer if you are just starting out in stock market investing and can't afford to buy a whole share of Tesla stock. However, Vanguard allows fractional shares on dividend reinvestments. That's where Fidelity has an advantage over Vanguard. For Fidelity, you are allowed to buy fractional shares of stocks and ETFs. For example, if you want to own a portion of a Tesla stock valued at $908, then you can buy like as low as $1 worth of Tesla stock, or you can buy in portions like 0.25 shares on Fidelity. It's quite convenient, especially for beginner investors who don't have large amount of money to start investing in the stock market. Also, with fractional shares, you can invest in many expensive stocks that are usually beyond your price range, which gives you more diversification in your portfolio. So having fractional shares, Fidelity wins over Vanguard in this case. Now let's take a look at the minimum investment for some of the low-cost mutual funds of Vanguard and Fidelity. Vanguard has a reputation with low-cost index funds because they are the pioneers in the index fund space, thanks to Jack Bogle. But some of the popular index funds from Vanguard, like VT-SAX for Vanguard Total Stock Market Index Fund and V5X for Vanguard 500 Index Fund, have a minimum investment of $3,000. Well, if you don't have at least $3,000 in your Vanguard account, unfortunately, you won't be able to invest in those low-cost mutual funds or index funds. If you have less than $3,000 in your Vanguard account, don't stress out, you still have a chance to invest in the index funds. You can go for the ETF alternatives of Vanguard 500 Index Funds and Vanguard Total Stock Market Index Funds. And those ETF ticker symbols are VTI and VOO, which I would recommend you to do your own research. On the other hand, Fidelity is more beginner friendly. Its low-cost mutual funds or index funds have zero minimum investments, and like Vanguard's index funds. So basically, you can invest in Fidelity 500 index funds for as low as $1, and that is a game changer. Before we pick and choose which index funds to invest in, we need to understand the management fees of the index funds from Vanguard and Fidelity, which is also known as the expense ratio. Take an example of Vanguard 500 index funds V5X that tracks the S&P 500 index. It has an expense ratio of 0.04%. So for every $10,000 that you invest in V5X, you will be paying $4 in management fees per year. That is very low compared to other mutual funds in the financial industry that charge 1 to 2% in management fees per year. However, Fidelity has challenged Vanguard with its low-cost index funds that offer even lower expense ratio than Fidelity index funds. By looking at this chart, you can see the ratio of both brokerages and their respective expense ratio for each index fund. Every index fund that Vanguard offers, Fidelity has a competitive fund with lower fees. Similar to Vanguard 500 index fund, Fidelity has its Fidelity 500 index fund with an expense ratio of just 0.015%. So for every $10,000 that you invest in Fidelity 500 index fund, you will be paying only $1.50 in terms of management fees per year. And it doesn't end there. Fidelity also offers index funds with zero expense ratio, which you can invest in those funds without any minimum investments. That is quite convenient for beginner investors. How cool is it? By looking at this, we can see that Fidelity is setting a new record in the investing space with its low minimum investment for its index funds as well as lower expense ratio. So in terms of expense ratio, Fidelity definitely wins over Vanguard. While it is important to focus on the investment products, the expense ratio, and the minimum investment of those investment products, we should also compare the platforms of both brokerages because obviously we are using the platforms to buy and sell investments. Vanguard's web platform has very basic interface with minimal functionality. Its mobile platform is very outdated and simple in terms of design. But it is a great platform if you are a buy and hold investor or long-term investor and you don't trade quite often. Let's say you want to buy into VTSAX on Vanguard and hold it for 5 to 10 years, then you don't need to use the platform quite often. On the other hand, Fidelity's platform is easy to navigate and intuitive. And also, you can customize the view of your portfolio according to your preference. You can buy shares in fractions on both web and mobile versions. The platform is ideal for any type of investors, long-term investors, short-term traders, and also even for beginner investors. So I will give an edge to Fidelity in terms of platform features. In terms of customer support, Vanguard offers phone support from 8 a.m. to 8 p.m. Eastern Standard Time from Monday to Friday, and you can also send email to Vanguard if you have further questions. And on the other hand, Fidelity has 24/7 phone support, email, and chat support. In this case, Fidelity has an edge over Vanguard in customer service. So overall, these are the differences between Fidelity and Vanguard that I have found. But if you know other differences between Fidelity and Vanguard, please let me know in the comments below so that you can share with other people on this channel. In my opinion, I personally enjoy using Fidelity brokerage account over Vanguard brokerage account. I personally like Fidelity platform being intuitive and easier to navigate. I also like the zero minimum investments for Fidelity index funds. And that allows me to diversify my investments in different index funds with a lower budget. And my most favorite feature of Fidelity brokerage would be the fractional shares. I can buy $100 worth of Tesla share or 25% of a Tesla stock without having to spend on the cost of the entire share. However, Vanguard has its own perks with its index funds. It serves well for the buy and hold investors in its index funds. Also, Vanguard Total Stock Market Index Fund has over 4,076 stocks, while Fidelity has 3,985 stocks in its competitive index funds. In this case, Vanguard gives you more diversification and more exposure to the stock market. But the performance of both funds are very close to of Dow Jones Total Stock Market Index funds. So at the end of the day, it is totally your personal preference, and I would recommend you to try out both brokerage firms and see the difference for yourself and see which one you should go with. That's a wrap for now. I hope you get a ton of value out of this video. If that's the case, please smash that like button and also subscribe my channel for more video content just like this. I make video on personal finance, investing, entrepreneurship, and lifestyle videos. So if one of those topics interests you, I would recommend you to subscribe my channel so that you don't miss out on new videos just like this. Thank you for watching, and I'll see you in the next video.